Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for September 15, 2014. This is let me go over the S&P 500 here and start explaining what I see might be going on. As pretty much a lot of my members and subscribers know, that I used the November 2012 trigger point, starting point, as an acceleration point in the market, where you can clearly see this uptrend line is still very much intact. It does get broken below the 1937 level on the S&P, and below that, obviously, much lower levels come into play. At one point or another, I do believe that 1900 or so does get tested, and I think it's going to happen in short order. And no pun intended, and I believe that happens in the month of October. We could go as low as, in my opinion, we could at that point do a fib retracement. Again, these are longer term things here. You can actually look at a fib retracement if you want to look at a longer term view of all the way down to 1870. In my opinion, I think we hold this 1890, 1900 level, and possibly slip a little bit down to with 1890 level, but that should contain, that should contain the market somewhat. But then, we just can't predict those type of things at this juncture. So here we have a consolidation flag. Nothing really has changed on the S&P 500, and unless we break below the 1960 level, we seem to be okay. We could come and test the uptrend line here at 1936 and still be okay, like we had the situation here at the beginning of August. So we have two scenarios in play here. We could bounce up from here and hit and get back towards the 216, get back towards the make a higher high, maybe 2016 to 2020, or and that's if this consolidation flag works out, and that's a possibility. Or we might come down and test the 1970 level here. This is the confluence of the 34 and the 50 moving averages, and these uptrending lines here, that being the 32 and the 22 moving averages, and then bounce from there. Or we might do, let me get my line here, showing you different scenarios. Or we might go ahead and slip below this, similar to this, slip below this and come straight down towards the 1930 level. So if you look at it that way, that's about 50 points from here. So 50 times, that's about another 300 points in the Dow. Could very well happen, and happen real fast. So if this is the August scenario being played out, then we can go ahead, we can come down here and then start to move up again. If this is the February scenario that's getting played out here, then we are simply going to build a consolidation flag, move up, and possibly make a new high. So both let me get this out here. Both scenarios are on the table. If we are looking at, let me show you this here. Pattern symmetry is extremely important in the market. So if we are doing this, then we are at this level. Gotta move this. We're at this level here where we have a consolidation, okay? And then we move up, move down a little bit, move up again. So if that's the case, then we are here. So we should break out of there, get towards the 2020 level or so, move up a little bit, and then consolidate and and then come down and test these levels. At one point or another, this the level that I showed you before on the 1900, let me see here, does the 1940 or so does get, I believe, this level does get tested around 1940. So that's, if you want to know what the market's doing, that's pretty much what it's doing. These are all pattern symmetries right here. And this is the same pattern that it's following. So we could either break down completely and test this line, or move up from here, move up a little bit, and then come down. One way or the other, I believe that October we're going to have a nice fat correction, and that's probably where we drop from 2000 down towards towards the 1900 level. Let me move on to the Russell 2000, the famous Russell 2000. I've shown quite a few charts on this. This one is already pre-made there. ready to deliver, and this is what we're seeing. We moved up fast and furious from the 1080 level, well, in this case, the 1105, and we moved. With this was a pretty phenomenal move from this. One second, I don't need to remind anyone. Zigzag up, but we got all the way up to the 78.6 fib retracement. Now, what we're doing is we're coming down, and we are at the 50. Look at this. This is the 50. Very important. Stay unemotional as much as you can. It's a 50% fib retracement level. We're right here. So, and we also closed this gap. There was a gap here, and this gap got closed today, right here. So, let me get these lines out. Get the lines back in again. There was a nice big gap here, and that's the gap that got filled today. All right. So at this point, two things can happen. One, we slip and we fall, and we come down towards the 38.2 retracement, and that would bring us down to this level. That would be around 1128. It's a 20-point move, and it could very well happen. Or we bounce from here and we test the this 1170 level again. Of course, we have to test the underside of this uptrend line, which is around 1164. But those are the two scenarios in play. Get really bullish here. It can get towards 1176, and at this point, if you want to look at a pattern symmetry, this is what it's doing. So it could very well do this and move up towards 1188 level, where where it was trying to go before. All that is dependent on all the different events that are in play right now, and we'll just have to wait and see. You have to be very quick with these things and be ready to change intraday direction on a heartbeat. One of the things that I want to remind everyone very clearly, this is an extremely volatile market. I've said this a zillion times. I'm going to say it again. So keep your position small, and when positions don't work the way you want it to be, and it certainly happened to me, at least the positions are within manageable reason. Get stopped out. I always put stops there. People ask me, so am I still holding or not? My risk tolerance is higher. My positions might not be big for that particular range, and I probably believe that given the confluence of events that are coming up this week, that the market will have a strong bounce. So all those keep me in there, and I buy some, and a dollar cost average down. I don't recommend that people do that. I put the stops there, 50% on the stops. You lose 50% of an option move, option that you're holding. Get out. So that's just the way it is. In the meantime, do not expect the market to follow your bidding. Don't think this is a bear market about to start. These type of corrections happen instantaneously, and then they disappear. And then we watch, then most traders watch the market as it zooms up 300 points. And like I like saying many times, that 90% of the traders miss 90% of the rally. And it happens all the time. So at this point in time, if you look at the 4-hour chart, which is a nice indication of where we are kind of precariously on the 50 average. We have lost the 34 on the 50 here, so we could very well come down all the way down to these deep down levels, or we bounce from here. So we've yet to see. On a shorter term basis, I've just showed you what where we are, and again, that's gap fills are very important. And there is, we could come down to about 1141 or so, looks like, on the RUT, and move from there. So that's the chart of the S&P and the Russell 2000. And I highly recommend that traders do not trade the IWMs or the RUTs unless they're watching the RVX, which is the Russell 2000 Fear Index, or the futures, and be prepared to change direction and have wide stops. And really, there's no rule in the game. I mean, the way these things, the algos are driving these charts, you can certainly, you can play scalps. Just play scalps. We have some very good traders in the room who do that, and they play it for a couple of points and not make any, directional determination that this is going to happen, because there's nothing written in the books that says it is going to happen. That's it. These are just road marks, that